And the coronavirus sweeps through world markets. Top global fund manager David Paradise on how worried we need to be about the year ahead.
Are you sick of hearing about coronavirus and people talking about and referring to coronavirus as far as the market direction and everything else in life? Let's just remember some of the other viruses that they've given us. In an unlikely scenario of media wanting us to actually know what really happened, this would actually be the case, meaning that what they're telling us now would actually be the truth and how and when it all happened. I'm absolutely not claiming to know how and what happened and when, but it's a little bit rich for, say, market analysts to analyze the coronavirus lifespan and life cycle to compare it two-dimensionally, very simply, to the markets, as if when the coronavirus is done, the markets will continue to go up. Until that time, the market will go sideways or down. I mean, that's very simplistic, two-dimensional. There's a lot more that goes on in the markets. Coronavirus is just a tip of the iceberg. I really don't want to get into other conspiracies or conspiracy theories. I can simply tell you that whatever I see on the news, which I actually rarely watch, but it's very hard to miss some of these occurrences, I don't believe it. What do you mean? Well, I just don't believe the official story. It probably happened some other way. Do I know how? I don't, absolutely not. But somebody always benefits from these. Here's an example.
To the markets, and Australian shares took the biggest hit for the year today thanks to coronavirus fears. The ASX 200 dropped by as much as 1.6% during trade, closed 1.3% lower.
So we're to believe that that happened due to coronavirus fears, as if that fear wasn't there the day before when the market was pumping, or the day after also when the market was pumping. So what happened? The fear just wasn't there. There was other focus in the market. This happens all the time. I'm not knocking ABC or anyone else. It mind boggles when they confidently state that market went up or down because of, and just insert something that is current affairs.
Veteran fund manager David Paradise has $16 billion under management.
So let's see what a man who is, for example, managing $16 billion as a money manager has to say about these things, how they correlate or actually cause each other.
David Paradise, coronavirus has sent markets tumbling, particularly today. What's your view? Is this going to be a long-term thing or a bit of a flash in the pan for markets?
What usually happens is the equity market will trough when the peak of the fatalities and all that kind of stuff happen. Now I have as good an idea as you do as to whether what happens, but you know, you would think that there will be a defined period when this affects, and you know, things will get back on track again. So you know, obviously we all hope that they contain the thing, but there will be definitely effect on tourism, you know, and we're seeing it here, and on industries around the world, especially China, and we're a big reliant on China for lots of things. So yes, there will be a short-term effect.
All right, there you go. That is the view of the $16 billion under management man, and you know, so the market should trough when the peak of the epidemic happens, I suppose, and we're hoping that they're going to contain the thing. So let's see how that works out. That's actually a very perfect and a very good segue on to the analysis on how much is this coronavirus going to affect us. Coronavirus, obviously, as they tell us, originates from China. What does that mean? How much do we deal with China? How much do we export to China? They've summed it up really well. This is the pinnacle of this presentation. I think you already have an idea what this is going to look like, but let's have a closer look.
Some have dismissed coronavirus as no biggie, pointing to the economic flash in the pan that SARS ended up being. However, during the SARS outbreak, China's quarterly growth dropped from 11.1 to 9.1%. This chart shows China's global importance has come a long way since SARS, and so has Australia's reliance on China, not just for tourists, but more importantly, our exports. China bought 33% of everything we exported last year. Nearly all our iron ore shipments went there. Almost a quarter of new foreign students here are from China, so universities will be hit. Tourism is going to be hit harder. The Chinese government has stopped all group tours leaving its shores for at least 2 months. Chinese visitors account for around 30% of tourist spending, or $20 billion here. On the market, the most likely to be affected are the obvious: casinos, holiday bookers, airlines and airports. But plenty of upside for makers of vaccines and medical equipment. China has shut down factory activity in some areas, and oil and iron ore prices have plunged in response. Treasurer Josh Frydenberg conceded yesterday this will hit government coffers. Multiple banks have now downgraded growth prospects, and the chance of a rate cut tomorrow has lifted slightly.
So everything we export, 30%, 33% of it goes to China. 82% of all of our iron ore goes to China. I'm actually surprised it's not like at 99.999%. And 25% of foreign students in Australia are from China. And guess what? They can't fly in now because of this coronavirus. And the world coming to us, 30% of this world is China, and the spending is 30% from Chinese visitors, let's call them. I have a slightly funny story. So this was last Monday, 3rd of February 2020. Today is actually 10th of February 2020. So it's the Friday following this report, but I've got a little bit to catch up. And I went to the Star Casino today for lunch because I have a day off, and it was empty. They have a buffet there for $15 off on Mondays, and I happen to have a day off. I thought I'll go there with a friend of mine and we'll have lunch. And normally it's packed. Every other Monday that we've went in the past, it was packed. Not this Monday, so that's your corona effect, because I think because of the Lunar and Chinese New Year, a lot of Chinese have gone back to China, and I know a few, and then now they're trying to come back, and they're not allowed to come back. So the economy is definitely going to suffer. Yes, there'll be less gambling, there'll be less eating at the Star, and obviously no flights, Flight Centre, Webjet, Qantas, and the Crown Casino in Melbourne. They're all going to get affected, including the universities, because these students won't be able to come back in time to attend their classes, but I'm sure that they'll take their fees in any case. And because nothing's moving, I suppose commodities are crashing. All right, so what should we do? The investors, the people who are looking to buy property, invest in it, or share market, or gold or silver.
Investors will need to get used to the volatility. There's plenty more to come this year. How will markets respond, and are the downside risks getting too great?
Okay, well, I think just buy property. Property never goes down, so just plow into the property, get $1 million into it. If you have 100,000, put your 100,000 down, get about 900,000 from the bank, and what could go wrong? I am obviously joking, and this is not a financial advice, even what I'm going to say next, because Martin Armstrong is called a temporary top to the markets. I've actually bought some of this BBOZ.AX. So BBOZ is a exchange traded fund that goes up when the markets go down. So this is one way to kind of short the markets. It actually goes up double when the markets go down. So we'll see if I did the right thing or not. I didn't put my life savings in there. It's only play money at this stage, but BBOZ, I'm already up, but I bought it last week. So this is not a financial advice. This is something I did. I suppose I'm putting money where my mouth is, because again, I have no choice but to trust some source or sources. And the only one I can trust now is Martin Armstrong. He did say that the temporary high was reached in Dow Jones. So it's a bit silly to think that we're going to exactly follow the Dow Jones, but I can't see how we could go any too much different to Dow Jones. And he also didn't say it would crash. He said that it would go potentially sideways, maybe a bit down, a little correction, and then sideways. If the market's strong, there won't be much of a downside anyway, meaning that because it didn't go down that much, it's going to go back up with the vengeance when it does. This is for Dow Jones. This, however, is the stock on the Australian Stock Exchange, not stock, the exchange ETF, exchange traded fund, that is tracking, I think, ASX or All Ords or one of those. In any case, when the market goes down, this goes up. So it's a double hedge. Strong hedge means that, but it actually doubles to whatever the market is doing. It will all be very interesting to see. Thank you all, and we'll chat again soon. Bye for now.